This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
I'm Heather Branch here with Jon to talk about ways to help you better prepare for your financial future. RetirementSolutionRadio.com is where you can go to begin your own conversation with the team at J. Hagan Capital. We also have links posted in the show notes, so you can just click there if that's easier, or again, find us anytime at RetirementSolutionRadio.com. All right, so we're wrapping up the year.
Yes.
There are all kinds of things to be done, personally, professionally, financially.
Like physically wrapping up presents.
Actually,
you said wrapping up the year, and immediately I had this impending doom in my stomach. I'm like, hold on. I haven't wrapped anything. It's getting really close now.
I didn't mean to trigger.
Oh, no.
All right, don't think about that. Forget about that, because I want to talk about the financial wrap-up at the end of the year.
Okay, fair enough. All right,
because there are questions and there are things that still can be done, even though we're very close to December 31st.
Yes.
One thing Morningstar's Christine Benz was talking about is, if you can, try to max out your 401k contributions. For somebody over 50, that could total up to $30,000 in 2023.
So if you're the type of person who just kind of has your 401 plan contributions on autopilot, you don't revisit them frequently, take a look at that. If you can supersize your contribution, then you may be able to increase those contributions and get that full amount in. So check up on your retirement plan contributions. You have a little bit more leeway with respect to IRA and health savings account contributions. You actually have until your tax filing deadline, mid-April 2024, to get those in.
So maybe for somebody listening to us on the radio right now, where they need to think, oh, I do, because there's a lot of stuff that's online now. You could go online, check your accounts, see if there's room to maxing things out.
So, Heather, the end of the year, there's all kinds of things that people, we just haven't been trained on how to do this, right?
Right.
The last time I checked, when I was in a big company, no HR person ever reached out to me, ever once, never once, and said, Jon, hey, there's about a month left of this year. Do you want to make a whole bunch of really smart tax decisions here at the company?
Yeah.
The answer is no. They've never once asked me that, but I would want to do it if I could.
Right.
So you're going to have to tune into shows like this on the weekends, on your spare time, when you're not on the company dime.
I know.
To learn these things. How sad but true is this? But when you think about it, there are so many things we have able to us at the end of the year. So, number one, if you want to maximize your contributions, yes, you can take that right off your taxable income.
Okay.
Let's assume that you put away, I don't know, let's say $100 per paycheck. Okay. I'm just making this up. The standard company out there get paid about 26 times a year. So that means you would have put in $2,600 that year. Do you know what your maximum threshold is? Nearly $30,000. So if you wanted to save money from your taxes and you realized, man, you got some money sitting in your bank account at home, you might as well get that money tax deferred for next tax season. You can do an after-tax contribution to your 401k.
Interesting.
Whoa. It's like, whoa,
yeah, right,
Jon.
Right.
You're talking nonsense. No, hold on. Why on earth would I want to take money sitting in my bank account and then put that into my 401k and have that work for me? Well, there's a couple reasons. Number one, you will get a tax break by April 15th of next year. By putting that money in this year, they will pull that off of your taxable income, right?
Okay.
Number two, you're going to have that money grow tax deferred for you for as long as you leave it in there. Right. Now, so if you're 29 or 30, I don't know that I would suggest you do this because you're not going to be able to touch that money until 59 and a half.
Right.
Okay. Now, if you're 58, 59, 60 or older, then guys, there is no reason not to go ahead and hit that maximum tax deferral threshold of $30,000 a year.
Okay.
Now, for those of you out there that have actually listened to me for the last decade, and I mean listened with a capital L, you know that I don't like deferring tax a lot of the time. I want to get rid of that tax bill forever. So let me turn up the volume on this one.
Okay.
Heather, once you get that money in that 401k, you can do what they call a mega backdoor Roth conversion. And check this. You can convert, whether it was already previously taxed dollars or tax deferred dollars from your account. You can defer and convert $60,000 a year into a Roth 401k. Now, why is this important? How much money can you put into a Roth IRA annually.
You were saying 30,000, right?
Well, no, that's in a 401k, but
Okay.
in a Roth IRA, we only get $7,500 a year. That's if we're over 50.
Oh, that's right. Okay. Yep.
So imagine being able to put away $60,000 a year into that Roth.
Right.
And people are going, "Oh, John, even if I wanted to believe what you're saying, this sounds like visions of sugar plums dancing in my head in December. This makes no sense." It is crazy, but this is how the laws work, guys.
Got it.
We have to understand these rules if we want to play by them. And if you want to win by these rules, you have to know them in the first place.
Right.
You can take after-tax dollars in about 80% of the 401ks out there. If you're with a big employer, chances are they allow it. You can technically write a check to go right back into your 401k and invest it after tax. Now, are you going to get a tax break for that?
No.
Not if you do it the way that I'm talking about it.
Right.
Because you're taking those after-tax dollars and you're putting it into the 401k to do an immediate Roth conversion. So what did you just do? You backdoored into a Roth IRA. And how much did you put in? $7,500? No, up to $60,000. Now, if you have a few years before you get to retirement, is that a really smart thing to do? Oh, ladies and gentlemen, that is potentially a genius thing to do. Now, part number 2, if you're over 59 and a half, can you roll out that Roth 401k into your own self-directed IRA and invest it into anything you want? Often the answer is yes. So because of that, what I've just told you very quickly, and it's not sugar plums dancing in these dreams, it is truly how the world works. If you're looking for really smart ways to get money away from the tax man in December, don't think you're going to make a whole bunch of conversions in your IRA. Believe me, I deal with Fidelity and Schwab and all these guys every day, and they are already slammed. They're already telling us, hey, let's don't be thinking as this is the middle of December that you're going to get all these things done.
Right.
The easier way to do it might be to use the low-hanging fruit and do a tremendous backdoor mega Roth conversion. This could be the difference between you hitting your tax-free income goals of the future or missing it completely.
Okay, so, and to keep on the idea of what we can do, because you just said, you were talking about people that are 58, 59, thinking about their pre-retirees, thinking about their retirement. What about those who have already retired and thinking about Roth conversions? Is there a cutoff age for this opportunity? Is there more opportunities for somebody who is already retired? What about people in that space?
So if you want to do a mega backdoor Roth, you have to have an active 401k account and a company that allows it. Okay. Now, if you want to do just normal Roth conversions, you can do that at any age, anytime you want. But you're going to end up paying taxes April 15th of the following year.
Right.
The amazing thing is, if you have, let's say, $50,000 sitting around in your bank account, and you've been excited because you get 5.5% from that bank account but if you decide that you can put that back to your 401k to convert to a Roth, ladies and gentlemen, you can get 5.5% completely tax-free in that Roth at that point. That is a very different ballgame.
Got it.
And what I mean by ballgame, Heather, is think about it. We've been told that it's really, really hard to win the tax game over time, right?
Right.
And we know how difficult it is. Whether we have a CPA or we have even a tax attorney that looks at this stuff for us, it's not always black and white.
Right.
The craziest thing, though, is, and think about how simple this is, if you are an active participant in a 401k that allows for after-tax contributions, you can take that money that you're going to get a 1099 on every year, convert it to a Roth, and make that same 5.5% from that money market without taxes for the rest of your life. If nothing else, it's just a smart and easy way to game the system. Hey, I didn't make the rules, I didn't make the laws, but I know how to play them. If you don't know these things, if you've never heard these things before, maybe it's time you get a second opinion on someone that knows something about some taxes. And by the way, hey, I've been talking about taxes on the show for over a decade, but I realize my limitations, which is why we have CPAs and tax attorneys physically in our offices that work with our clients. Now, they don't work with people that aren't our clients because they stay that busy working with our folks. But if you want them to take a look at your stuff to find out what you can do, guys, if you do not have a plan to keep your money away from the government, I promise you the government has a plan to pry your fingers off of that money. So get that plan today. Let this be the gift that you give to yourself and all future generations of your family by doing the planning right. Call my staff and get that plan now.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Jonathan Hicks, insurance license number 548962.